What's up everyone, it's Caddy with Money Investing, and markets here pulling back a little bit. We've got the Nasdaq, the Dow, and the S&P 500, all three indices red on the day on the back of a technology pulling back after having a very strong month of May. So month of May is over in terms of trading. Today was the last trading day of the month of May, and of course we had a very strong rally in the Nasdaq, in the S&P 500, not so much in the Dow Jones. So as always, if you enjoyed this video and find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us. Today is literally the last day if you want to take advantage of that 16% annual discount that's available. And after tonight, after midnight, it is going to go away. So you get access to all the buy and sell alerts, options alerts, trade ideas, and all the other benefits, including private live streams and all the trading view charts and links as well. We do currently have a trade idea right now going on TMF. That's the bond price ETFs, which we have talked about in our channel on previous videos. But this right here is the setup right now. TMF up another 2.5% on the day today as the yields continue to pull back. We are seeing a little bit of a pullback in the 10-year treasuries, back under 3.7%, not to mention the 20-year treasuries are now closer to 4% as well. So as the debt ceiling resolution takes place, we are seeing yields pull back, and of course bond prices, which move inversely to yields, pushing higher, and that was the entire premise of the trade idea to begin with. And right now we're seeing a lot of momentum, and the target's going to be all the way up to $8, $8.50, $8.75, closer to those levels, which does represent a good 15 to 16% swing to the upside. So again, link's going to be down below if you're interested in joining, getting access to all the alerts, and of course that 16% annual discount that does expire tonight. So stocks slip as investors look to House vote on debt ceiling. Nasdaq pops nearly 6% in May, and the Dow Jones was basically lowered today, 41 basis points. S&P dipped 61 basis points. The Nasdaq here slipped 63 basis points, finishing just under 13,000 points, and the S&P was a little bit under 4,200 as well, and then the Dow Jones was just under 33,000 on the day today. So the deal, which was reached over the weekend by President Joe Biden and House Speaker Kevin McCarthy, cleared a major test on Tuesday after advancing on the House floor by a following vote, 7-6. And now it's of course expected to be passed in the Congress. And again, tonight's going to be the vote. So Wednesday evening is when that's going to take place. Representative Patrick McHenry says, and I quote, "I think we have the votes to pass this today." So again, we can hear about this any day now, any second now, pretty much tonight. And as soon as that news comes out, that will be passed into law. And we'll see, of course, the yields react and the futures market also react to this potential debt ceiling resolution. So some investors are worried that the high decibel dissenting fringes might end up causing this vote to fail and require some adjustments before it ends up passing. People are taking whatever profits they can ahead of the vote tonight as well. Yes, there's a little bit of uncertainty there, obviously, and of course June 5th is the X date when the government is going to potentially run out of money, according to Janet Yellen, which is going to be pretty catastrophic to think about in just about 5 days. So they obviously need to get to a resolution as quickly as possible, because nobody wants to assume or nobody wants to really envision what a default might look like. So there's going to be re-ratings, there's going to be volatility, there's going to be a ton of uncertainty. Yields will most certainly skyrocket as well, giving us even a better and bigger opportunity to dollar cost average into TLT or TMF for the eventual resolution that takes place in the future. But right now, as it stands, we do still have some time. But if it does come back today, they're going to make some adjustments over the weekend, and most likely it's going to get passed sometime next week as well, if of course it fails tonight. So this right here is the state of the market, and a lot of concentration in healthcare. And what we really saw was money kind of flow out of technology, a little bit out of energy, out of financials, and move more towards staples and healthcare. That's really where the liquidity went on the day today. Nvidia here down 5.6%, AMD down over 5.6%. Google, Amazon were lower, Microsoft was lower, Apple was flat on the day, and energy, of course, selling off pretty significantly along with financials. But we did have healthcare companies, so Pfizer, Johnson & Johnson, AbbVie, UNH, all these companies pushing higher here on the day, doing really well as utilities. If you take a look at the entire utility sector, it was all green. Nextera Energy, Duke Energy, There's a lot of companies in this sector that were pushing higher, and of course, not to mention consumer staples was also green with Pepsi, Walmart. We got Monster Beverages, we got Costco, we got Kraft Heinz. A lot of companies pushing higher in that sector as well. So this right here is the last 1 month, and I wanted to kind of talk to you about this because it's all a liquidity's game, right? It's all a game of where the liquidity is going, right? Where are the whales going? Where's the money going, right? That's really the game here that we're constantly trying to anticipate. Where is the liquidity going in the future? And since tech was so out of favor back in September, October, November of last year, that was the place to be to build up those positions prior to liquidity coming in there, right? Prior to the whales, prior to institutional hedge funds, all these sort of big money managers kind of flowing into technology. So you needed to be there before that actually happened. And now it's starting to feel very, very overcrowded, right? Things that we have talked about in terms of technology being the leader in 2023 doesn't necessarily mean that it can't go higher. It certainly can. Markets can become even more concentrated with more narrow leadership, with more overbought levels, with more overvalued companies. It's always going to happen. Sentiment swings into extreme levels. That's the pendulum that we have talked about on the channel before. But the idea here is to really talk about relative valuation, risk and reward, and where the liquidity might end up going in the future, even though this right here, this right side of the screen is very much out of favor at the moment. You're seeing consumer defensive, energy, industrial, healthcare, material, utilities, financials, all these out of favor, and there's only a handful that have been in favor in 2023 so far. So now you tell me, like, which has more reward versus risk, right? Is it Microsoft, Apple, Google, Meta, Amazon, Tesla? Are these the companies that have a more reward, or are these the companies that have a higher reward since they have been sold out so aggressively? It's a very difficult question to answer, right? Because right now the sentiment's so strong for these companies, for these tech companies right here, that they can go even higher, but the valuations are starting to become more attractive, more lucrative on this side of the screen, but they might not be in favor anytime soon considering the sentiment and the momentum still pretty strong on these companies over here. So I'm going to be on the constant lookout for any companies that might end up being good value for money in these types of sectors here, which are, again, selling off pretty aggressively. And if it makes sense, I'm not going to shy away from dollar cost averaging into some of these companies over here because, well, tech has done really well, and I'm still very much concentrated in tech. My biggest positions, again, are Meta and Tesla, followed by Google, Amazon, PayPal, some of these companies, and of course, Advanced Micro Devices. I need to understand, and objectively, I need to know when it's time to actually take some profits off the table, considering how overbought and overvalued we're starting to become on technology. Just something that I'm going to be focusing on here. So one day, we did have utilities, healthcare, real estate push higher, other sectors sell off, so that's quite unusual to see those sectors move higher. They're the ones kind of driving in the liquidity here today. And over the last 1 week, we still do have technology pushing up 5%. And over the last 1 month, we do still have technology and comm services as the big leaders. These are the only two sectors really that have done very, very well. And in the futures and commodities market, lean hogs, rough rice, copper prices, coffee prices, all of them pushing higher with sugar, canola, and we had crude oil also selling off, and Bitcoin a little bit over 27,000, and Ether just over 1,800 at the moment. So this right here is going to be BTC. Again, we're starting to see a little bit of a pullback, getting rejected from that lower high, that descending triangle. So that right there is going to be that resistance back to 27,000, closer to that levels. And support level is going to stay put at 25,000 for Bitcoin. And for Ethereum, we're back under 1,900. And this right here is a resistance level to pay attention to watch. And right now we're getting rejected at that level once again. And support level is going to stay put at closer to $1,750 to $1,700 per coin for this crypto. Talking a little bit about volatility, so we are very, very flat, so we didn't really move much. We're back almost at 18 levels, up over 2.6%, but for the most part, consolidating sideways. We're not really seeing a lot of momentum, and resistance is going to stay up at 20, 21 levels, so this right here is going to be that level to watch for volatility. Talking about the markets here, so QQQs, again, very, very overbought here without a doubt, and it is starting to kind of hit along this resistance that we have gone rejected at in the past from back in April of 22, so just about 1 year ago. We were at these levels, and it's quite interesting to see the stark difference between the NASDAQ 100, which is much higher than its August high, versus the NASDAQ composite, which is exactly at its August high, right? So it's quite interesting to see how NASDAQ 100 has moved up so far up and so far beyond its previous resistance levels, getting up to these extreme levels, getting up to overbought levels, as opposed to the actual more general NASDAQ composite, which is still at its resistance from back in August over here. So you can see that we got a very nice breakout. We got up to that level, and now we're starting to kind of test that resistance at around 13,200, in line with that resistance from back in August of 22. And then, of course, not to mention the S&P 500 is nowhere near close to its resistance from back in August. And then, of course, our SP, which is a more equal weighted index, is nowhere near close to even its April resistance from 2023. So what we are going through from NDX to IXIC to S&P 500 to RSP, these are 4 ETFs or indexes I would encourage you to look at. And what we are going from is a high concentration to a well-balanced, equal weighted index, right? So if you go through that chain, you go through that ladder, you will understand that one of them, NDX, extremely high, way beyond its August resistance. The NASDAQ composite at its August resistance. S&P 500 almost at its August resistance. And RSP nowhere near close to even its April resistance, right? So that's the process. If you kind of follow those 4 ETFs or indexes, you'll have a much better understanding on the market breadth and what's really driving the move higher, which stocks are actually pushing higher, and then of course not to mention why other stocks are lagging behind in the markets and we're not really seeing a lot of momentum to the upside. So that's something to keep in mind, of course, and we've talked about it on the channel several times before. So right now we're still at that area of support for the S&P, sitting roughly at 41 to 4,200. And of course, we got the NASDAQ here now fighting at that resistance at 13,200, trading above its moving averages. And once again, at that August level for the NASDAQ. So, overbought conditions, support level is going to be at closer to 12,280. It's possible we start to see a bit of a pullback here, considering that the markets have really moved up on the back of tech, quite a lot. So wouldn't be surprised to see some profit taking at these prices. And that's exactly one of the reasons why I do have covered calls as a downside protection, downside hedge for if and when the markets do end up pulling back. If they don't, I'm happy to de-risk a little bit, as I mentioned earlier, not shying away from taking some profits off the table and capitalizing on the moves that we have already seen in the markets for the last several weeks to even a few months. Talking a little bit about Apple now, and Apple here on the day, once again, getting a bit of quite an interesting candle. So sellers stepping in at these levels. RSI, MACD here, again, overbought on the weekly time frame. Also very much to the upside. RSI is almost 70, and the MACD's also been pushing higher. And this candle kind of scares me a little bit, right? This is an inverted hammer candle. Sellers have really been strong this week so far to kind of bring us back down. And this right here is going to be that resistance to watch at closer to 177, 178. Talking about Amazon also, struggling a little bit this week. So after consistent weeks of green, we're starting to see a bit of a pullback. And of course, not to mention overbought conditions here. And we are also starting to see a little bit of a breakout past this previous resistance. And of course, those moving averages as well. So resistance is going to stay put at closer to 129 to as much as $130 for Amazon moving forward. Talking about Tesla, and Tesla here also starting to move up a little bit over 1.3%. So Tesla actually did really well today. And what's interesting is that Tesla got bought up. It was trading as low as 195, then it ended up closing at pretty much the high of day. That just goes to show there is a lot of optimism. There's still a lot of sentiment, a lot of momentum for this stock, and we're now approaching inside this red rectangle, which again is going to be an area of resistance to watch, closer to 208, 210, 225 dollars per share. So those right there are going to be some levels to watch for Tesla moving forward. Talking about PayPal here, and PayPal on the day was flat, didn't really move much, down about 10 basis points. It was higher. At one point, it was up close to 1 to 2%, but closing in at just under $62 per share. Support level is going to stay put roughly around 60 bucks. So this right here is going to be that support with a resistance all the way up to 66, $67 per share for PayPal moving forward. Talking about Square, and Square here pushing up over 2.6%. So support level is going to stay put at 58, $59 per share right now for this company, and we're still in the context of this downtrending channel of lower highs and lower lows as well. So next resistance is going to be all the way up to 62.40. That's a little bit of a near-term resistance to watch on this stock, all the way up to that 200 simple moving average, closer to 66. to $67 per share. Talking about Nvidia, the star of the day, star of the show, star of the market right now, seeing a little bit of a pullback, down about 5.6%. And again, it shouldn't come as a surprise, considering that Nvidia was extremely overbought, stretched to the upside. Valuation was also a little too perfect for the company, and market cap is now at 934 billion. Getting a little bit of a resistance there, and again, this candle does scare me a little bit. It's an inverted hammer candle. That means sellers have been stepping in, and usually happens towards the end of a potential trend. And of course, NVDS, which is an inverse ETF to Nvidia, was up a little bit over 7.2%. So again, as we talked about this, these moves don't last forever, right? If you believe that this is going to go on forever, I encourage you to think again, because nothing lasts forever. So support level is going to stay put at $347. That's going to be the next level to watch, all the way down to sub 300. Those are going to be potential support levels eventually, if and when Nvidia comes down to that level. Advanced micro devices also rolling over, and rightly so, because we talked about the valuation, the stretched technical conditions, and how overbought it really was, and resistance at closer to 126. So this right here is going to be that level to watch, and of course support all the way down to those moving averages, as well as low as $85, $89 per share for advanced micro devices. So got a couple of covered calls. We'll see what happens, and again, getting hit that resistance, coming right back down from that technical overbought level. Talking next about Meta platforms, and Meta here on the day still pushing up over 84 basis points, so getting a lot of momentum back up, and we still have a gap to fill here between 260s and 290s for Meta, and support level is going to stay put at closer to 237, and Meta continues to charge along, plug along here, pushing higher. And again, RSI and MACD very, very overbought, so I'm a little bit cautious here. Got a couple of covered calls on Meta for potential downside hedge protection, but support level is going to stay put at closer to $236 per share. Talking about Netflix, and Netflix here, once again, getting a little bit of rejection there at $398, closer to $400 per share, but we're still getting a very, very, very nice breakout to the upside, and this right here is going to be a new support in the 380s, down to as low as 340s, 350s for Netflix moving forward. And finally, we got Google and Microsoft. Google here consolidating sideways, not really moving all that much, down about 1% at the moment, trading at just over $123, and resistance is going to stay put roughly at around 131, 132 for Google, and support level is going to stay put roughly at 123, and of course all the way down to as low as $109 right now. Very much overbought. RSI starting to show signs of some weakness, and the MACD also on the verge of crossing below that signal line, potentially signaling some more downside for Google as well. Finally, we got Microsoft starting to pull back a little bit. Again, overbought conditions, not a surprise. Support level is going to stay put at $312, down about almost 1% today. Next support is going to be down to 292. Well, first is going to be at 312, all the way down to 292 for Microsoft moving forward. Resistance is going to stay put at 345. Finally, we got Shopify pulling back here, down about 63 basis points, selling right back down. $54 is going to be that support level to watch for Shopify, and resistance is going to be at $65 per share for the company right now. And we're just seeing, of course, a little bit of a pullback after being very, very overbought for Shopify as well. So hope you guys enjoyed this video and a complete update on the markets. What we are really witnessing is a little bit of a pullback in technology, rightly so, because we talked about overbought conditions, we talked about the valuations, we talked about the narrow leadership, so it's no surprise that eventually there is going to be some level of profit taking. Now, is this the beginning? Is this only a small blip? Of course, time will tell. I'm not one to make predictions for the future, but I will evaluate where the risk and reward goes from here, and then of course trade appropriately. So hope you guys enjoyed this video, find it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below. Don't forget there is a 16% annual discount that does expire tonight if you want to take advantage of it. So after midnight, it is going to go away. As always, happy investing, and I'll see you all in the next video.